The three biggest Dow decliners, Bank of America, all the financials, we've talked about it. Nicole's hit it. BAC down about 12.5%, nearly 13%. GM is down another 8% to just over $2. And GE down about 7.5% to $7.88. GE, of course, on Friday, cutting its dividend, something saying a couple weeks ago it would not do. We'll talk with Robert Maltbie of Singular Research a bit later on. He made a call earlier last week to sell GE. Well, you can see that call was very, very timely. We'll ask Robert what he thinks is now ahead for General Electric. All right, remember these words from GE CEO Jeff Immelt, quote, "I wish my words could end the speculation. The facts of what I've done here, I think, should let investors know that we have got the cash and we've got the operating model that's going to secure the dividend in this environment." That was the CEO of GE just on January 23rd of this year. Guess what? On Friday, GE cutting its quarterly dividend from 31 cents down to 10 cents, a big cut for that dividend. The stock right now at about a 14-year low. Earlier in the week, Robert Maltbie of Singular Research put out a note saying sell GE. So we brought Robert on today. Robert Maltbie of Singular Research joining us now. It was a good call, Robert. What made you see it? What was the main thing that came in your mind that said, hey, GE's got some problems ahead?
Well, actually, Brian, it's an accumulation of different factors, including a massive slowdown in the global economy. GE has been putting on debt for years, and it looks to be caught in the crosshairs of this massive global deflationary trend. So that combined with other factors, their financials, their interest to debt coverage ratios, and just continued deterioration really really highlighted this out.
So what do we do now, though? I mean, since your call, the stock's come down a couple of bucks. They've cut their dividend, right? I mean, at what point do we say this company's not, I mean, are they? I mean, is there any risk of GE going away? Because it's either going to go to zero or come back over time.
Well, don't shoot the messenger. We think there's more trouble ahead for General Electric. They have probably one of the most leveraged balance sheets in all of America. They've got a net tangible equity of about 1%. They will need to raise some money this year. Mainly, their GE capital service side of the business is right now very much working hard to restructure their debt, going from short-term commercial paper to longer-term notes. We think the next thing that's going to happen, unfortunately for GE, is they'll have their AAA rating taken away. In fact, already, if these global trends persist, their ratios are below AAA ratings. It could go lower. It could go a couple of notches lower the way it looks.
And that's it. I mean, I think there were 60 companies that had a AAA credit rating in the early 80s. Now there are 6. Will there be 5? Do you think that GE's AAA credit rating will get cut? We had a fund manager on about 2 weeks ago who thought it would.
We do. We think it's a virtual certainty unless there's some quick pickup in the global economy, Brian. They just, quite frankly, have too much debt to service. Also, the cash flow that they're generating is deteriorating rapidly. Perhaps what's even more amazing is that if you look recently, there's only, up until 2 weeks ago, there wasn't a single sell recommendation on GE. These are not new trends. Their return on assets have been deteriorating over the last 5 years. Their debt load has been increasing dramatically. They have been having to use debt to try to manufacture growth, and now they're really caught in the crosshairs of this global economy slowing down massively. They're going to have to do something, Brian, here to try to get some liquidity. The dividend cut is one thing. We think if things persist, they may be looking at some asset sales later on in the year if they can't raise capital.
Like what? I mean, they have a lot. I mean, GE Capital, it's fair to say, is probably unsaleable. You agree with that? That's where the majority of the problems are.
Yes,
so
we would agree with that.
They have healthcare, which probably has a lot about NBC. There's some other assets they could sell. What do you think they're going to have to do here, Robert?
Well, they may even, God forbid, have to put NBC on the block. If you look at the piece of their business that is the least strategic fit for what they own already, it would be NBC, and it may be the thing they can get the best price on in this market, at least right now. So don't shoot the messenger, but
we're not going to shoot
for GE.
Listen, I mean, you know, no one's going to shoot the messenger. It's a tough time for everybody out there, but it sounds like you're saying Don't be tempted by the 7 handle. GE stock, not a buy right now.
Absolutely not. Would avoid it.
Robert Maltbie, Singular
Definitely.
Research. Robert, appreciate it. Thank you very much. Hope it's a little nicer there in LA than it is here. Robert, thank you.